Welcome to the How of Business with your host, Henry Lopez, the podcast that helps you start, run, and grow your small business. And now, here is your host.
Welcome to this episode of the How of Business. This is Henry Lopez, and my guest today is Jamie Trull. Jamie, welcome to the show.
Thanks for having me, Henry.
Absolutely. Looking forward to it. Jamie joins me today to share how small business owners can uncover hidden profit and sustainable growth, or achieve sustainable growth. And so those are the topics we're gonna focus on. She's a CPA, a financial literacy coach, and a profit strategist. Early morning, trying to get those words out today. We're also going to discuss a little bit about her great upcoming book, Hidden Profit, a little bit about her journey, how she went from corporate to starting her own firm, and again, some practical strategies on how to become your own CFO in your small business. You can find all of the resources, including the show notes page for this episode, where we'll have some key links for you at thehowofbusiness.com. That's also where you can find information about my one-on-one and group coaching programs. And I also invite you to consider joining the How of Business networking group on Patreon, and subscribe wherever you might be listening to this episode so you don't miss any new future episodes. So let me tell you a little bit more about Jamie. Jamie Trull is a CPA, financial literacy coach, and a profit strategist. She's dedicated to empowering small business owners to maximize profitability and grow sustainably. With a background as a finance leader at Coca-Cola, a large corporation, Jamie transitioned from the corporate world to serve women-owned businesses as a virtual CFO. Observing then a critical gap in accessible financial resources for small business owners, I understand that well, she shifted her focus to financial education, using her CPA designation to break down complex financial topics into easy to understand strategies. Jamie has built a following of over 100,000 small business owners on her YouTube channel, very impressive, and on social media, where her guidance helps entrepreneurs and business owners like me achieve strategic growth and retain more profit, which is what it's all about. As I mentioned, her upcoming book is titled Hidden Profit. It'll be published by Simon & Schuster in October. So we're releasing this in September timeframe. So October 2025, that book will be available, but we've got some special offers for you. In the meantime, we'll get to that here in this episode. The book provides readers with essential tools to unlock your business financial potential. Jamie lives in the Nashville area. So once again, Jamie Trull, welcome to the show.
Thanks so much for having me. I'm really excited to be here.
Excellent. Excellent. Yes, absolutely. But before we get there, I want a little bit about your journey.
Yeah.
And it's interesting because I just read, of course, in the bio that you worked at Coca-Cola, but then I forgot to see that in your LinkedIn profile. But tell me, where did you start your career?
I started my career as an auditor. So I was not an IRS auditor, thankfully.
Right.
I was a corporate auditor at Ernst & Young. And so that was kind of my, beginning into the business world. And then from there, went to work inside the corporate world. So I actually went to Coca-Cola Enterprises, the bottling company for Coca-Cola, and spent 10 years rising up the ranks in finance there. So I was very in the corporate world, and I was there really responsible for their external financial filings. So I would create the filings, I would write the story of what happened with the business, right? So if it was a good quarter, I would help to craft, okay, what's the story we're telling? If it was a bad quarter, I would help to craft what's the story that we're telling. And that was all based on the numbers. And so I really kind of loved, financial analysis. I am a CPA as well, but I don't claim that. I don't claim that as much, because then I get people asking me all kinds of tax questions. And what I really love is financial strategy. That's my bread and butter.
I see.
Yeah.
I see. So back when you were at Ernst & Young and then at Coca-Cola, did you think you would start your own business?
Honestly, yes. And I think that that's one of the things I always wanted to. I am a CPA, though. I'm very risk averse. So for me, it was really a journey to get to where I felt like I could make that leap, right? I think that's the hardest thing sometimes in that beginning of business is now the time? Do I wait? Do I keep stockpiling more money and saving? Do I do this on the side while I'm working? And so kind of came to ahead when, my job actually went away and so it kind of forced the issue. I think I would have probably stayed in my comfy, cozy corner office for a long time, But my job actually ended up getting relocated to London because the bottling company was relocating to London. And I happened to be pregnant with kid number two at the time. So it wasn't a great time for me to pick up my whole family
Right.
and move to London. And so I knew I was working myself out of a job. I was working on a multi-billion dollar merger that at the end of the day, I wouldn't have a job.
Hmm.
And so I really had to think about what is it that I do? I want to start over. I'd spent 10 years building a career. And, those of you who have been in corporate, like you build up a certain amount of flexibility and trust in the role that you have. And I had done that, and it allowed me to have a fairly flexible life, even with this big corporate career that I
I
had.
see.
And
Were you remote
yeah.
with them, or were you working
No,
at?
I was in the office with them.
Got it.
And so, that was in Atlanta. I lived in
Yeah.
Atlanta at the time. And so I really was trying to decide, okay, what is the next step? And I honestly didn't know. We left Atlanta. We decided to move back to Nashville.
I see.
So I literally finished up my job. I did get 6 months of severance from my company, which was
Mm,
amazing. And they
nice.
worked with me that I also got my full maternity leave. So I'm
Mm,
really thankful for how we were able to kind of work all of that out. And so I had time to really think about what I wanted to do. And I did start applying to jobs, and I did start getting interest in,
mm,
corporate jobs. And I remember, I had this laundry list of like, okay, if I'm going to take a job, it's going to have all these different things that, it's going to have to check every single box. And I got one
interesting.
offer that checked every single box.
Wow.
And I still couldn't do it. I couldn't do it. I looked at my daughter, who was 9 months old at the time, and I said, I can't walk back into an office. I need to figure out how to make something else work for me.
Mm,
So I'd always had the entrepreneurial bug, but that forced me to say, okay, this is the
yeah.
time. This is the
Yeah.
time to
And that's
to
that
take the step.
often is the case for a lot of people in the corporate world. It's that
Yeah.
event that happens to us that
Yep.
finally makes us realize, okay, maybe I take a turn here. But yours is slightly different in that you had the option to go back to the corporate world, but the lifestyle that you wanted, you knew was not going to be provided by that job, right?
I had a toddler and a baby at the time. And so that
Mhm.
was a lot of what was driving me is that I knew, I didn't want to fully, stay at home. And even to make the move that we made from Atlanta to Nashville, my husband took a half pay cut. So I couldn't
Mm,
really just work from home. I needed to figure something out.
right.
And I really enjoy working. And so my business started, I wouldn't even call it a business. At the time, I didn't. I was kind of freelancing.
I see.
I was, helping small business owners locally to me that needed help with their finances, and I helped them do whatever they needed. Get your bookkeeping
Mm,
cleaned up, do your taxes, all. I said yes to everything
yeah, of
at
course.
that stage.
Well, I mean, you
Yeah,
you had to just to get ramped up and start
yeah,
generating some revenue, right?
exactly.
Yeah.
Yep. And there's a stage of business for that. Absolutely.
Mhm.
Yeah.
When you think back into the corporate, well, first of all, a couple questions for you. Would you have liked to have left sooner, or was the timing what it needed to be?
I think it ended up being what it was supposed to be at this point where I am now. I'm not sure. I think a lot of what I drew from actually has helped me in my business.
Sure.
That said, there were many years where I wasn't learning anymore. I wasn't
Mm,
growing anymore. And that is something I wish that I had spent more time, even if I hadn't left my corporate career, starting to
right.
learn a little bit more, picking up some books to read about something in the meantime,
Yeah.
kind of starting on the side because I really did. It was kind of a pull the band-aid off, which isn't necessarily how I would recommend doing it, right?
Yeah. But you'd become stagnant to some extent in some
Yeah,
periods. It sounds like
you
at
did.
least
Yeah, I had
intellectual. Yeah.
exactly. I had multiple years of just stagnancy. And then I stumbled into this world of books and podcasts and all these amazing things. And
Mm,
I'm like, man, I really missed time learning that would have
mm,
been helpful to really kind of starting that business when it was time,
yeah.
right?
All right. So let's bring it fast forward to what you do today for clients.
Yeah.
Summarize that for us. What is it primarily that you help clients with?
Yeah, and I actually don't even have clients anymore. So I started my business and I had one-to-one clients, and I really I enjoyed it, but I kind of got into that trading dollars for hours where it became very hard to keep up with. And what
Challenge.
I found is that the size of business I loved to serve were smaller, right? These were the businesses making under $1 million, often under, $500,000, sometimes under, $200,000, right? So
Right.
these are smaller businesses. They can't pay me
Mm.
what I really need to be paid in order to even try to come close to what that old corporate salary used to be,
Sure.
right? Without working 1,000 hours a week, which kind of defeats the entire purpose.
Yeah.
So I had to think about, how do I want to do this? Do I want to, serve different clients, meaning go for these bigger businesses? And I had a few that I worked with, but it wasn't really my passion.
Mhm.
Or do I try to change the game a little bit and serve the people I want to serve, but maybe in a slightly different way? So I really changed. I kind of accidentally fell in again to education. I was doing
Mm.
it to build my client portfolio. So I started doing, lives on Facebook back in 2018, 2019, and, things like that to show up and find new clients. And it ended up growing this giant audience that wanted me to teach them, right?
Mm.
So I realized, okay, there's a space here for this education, and I love being able to do that. And I can do that on a one to many, right? I can create programs, I can do group coaching, I can do this in a way that it is sustainable for me and my family, but still being able to help the people that I want to help without having to charge them, $20,000 to be part of some container that I would never advise they buy because they're
Right.
just not there yet,
Yeah,
right?
they can
Yeah.
really can't justify that. So what is the offering mainly now? What is it that you offer to these small business owners?
Yeah, I have many different tools and resources. So I have educational programs. I have a basics educational program. If you're just getting started, it's really focused on finances, right? Understanding what is a profit and loss, what is a balance sheet, how can I better track my cash flow? What kind of taxes do I need to pay? So we start there. And then I also have tools that go into very specific tax strategies. I enjoy some, for example, hiring your kids is one of my favorite tax strategies.
Mm.
You can do it legally. It's great. It's perfect for setting up generational wealth, for giving your kids all kinds of skills that they can use. My kids are now 11 and 8, and they both work for my business. So I have a program that centers around that. It's a great tax deduction as well. Set up a Roth
And these
IRA.
are
There's
like
lots of things.
self-paced programs. Is that what we're talking about here?
Yes,
Yeah.
yes, yes. We do self-paced programs. They're evergreen programs, so you can purchase them and, refer to them. That's my goal, is to refer back to them. They
Mm.
have tools in them as well. So it's not just
I see.
education, but it's also tools, templates. I make a lot of templates and things like that. When people are trying to decide if it's time to become an S corporation, right? I have a tool you can buy that helps you with that. So lots of these different niche tools that people need to be able to support them in business. And I also make money off of affiliate revenue. So I do a lot of
Mm.
with YouTube and teaching and things like that. I review different tools, resources, software programs, accounting software, payroll, things like that. And I do make affiliate revenue off of that too. So that's kind of the whole full gamut of where my
Yeah.
revenue comes from now.
So you've been doing this for some time. I'd
Yeah.
like to understand at a high level, what are some
Yeah.
of these common challenges that you see that small business owners have in this realm of finance? What are some of those things that stand out?
Yeah. I mean, there's a lot. I'd say the first, and I can speak to this as a CPA as well.
Mm.
I love a good tax strategy. I'll be honest. I love it. I love to save money on taxes, but I think sometimes we do that and also shoot ourselves in the foot, right?
Mm.
So there is a way to, you don't want the tail to wag the dog. And I see this happening a lot where businesses will almost purposely try to reduce their profit, not in good ways. There are ways to, again, take advantage of tax strategies that exist,
Right.
but the way you don't want to do it is spending on things that aren't actually a good investment,
Right.
for your business,
Yeah.
and trying to get your taxes down, right? Because it's kind of this backward approach. We want to increase our profit. Profit is good. Profit is what we pay ourselves from.
Mhm.
If we do not have profit, it's going to be very difficult to pay ourselves. And so that is kind of that like hill that I will die on is,
Yeah.
yes, I will give you the tax strategies, but make sure that the decisions that you're making are best for your business. Are they going to help grow your business? Is that investment actually going to provide you a return? If it isn't, you maybe don't need to spend it, right?
Right. Right.
So that's
Pay,
one of
pay
the
the
things.
tax on it. It's okay. Yeah. No, I
Yeah.
find that too. I'm glad you bring that up because I do. And I find that even as a kind of a mentality for personal finances sometimes,
Yeah.
like, oh, if I get that raise, now I'm going to be in a different tax bracket. That's a good problem to have, right?
Yes.
We will deal with that.
Yeah.
But yes, don't make decisions based solely on the tax consequences. We want to be smart about it, but don't let that be what drives your decision making, is what you're saying.
Exactly. Decide what's best for your business and then figure out how to do it in the most tax advantaged way possible, right? Like that's the best way to do it. And to be honest, too, I think we get a little caught up in the tax aspect of things, especially in that early stage of business. There are some things that are available. Some of the things I talked about, like S corporations, hiring your kids, obviously retirement contributions. Those are all
Right.
things that are available to you even at early stages in business. The unfortunate thing is a lot of the more, the things that you hear about with these various different complicated entity types and structures and all this stuff, it's really those are going to help you when you're making a lot of money,
A lot
right?
of money. Yeah. Yeah.
And so that all of a sudden you have, and it's going to cost a lot to hire someone to help you with that too. So that's part of it, is to think about, okay, is this going to, sure, this might save me taxes, but am I going to have to now pay someone to do all this for me, which is
Yeah. Now I've got
basically
four returns to file, and I got to keep separate
exactly.
books, and
I
I got,
see it all the
on and
time.
on and
I
on.
see
Yeah.
it all the time. Yeah. And I'm like, just focus on it, under a million, like just be focusing on getting that profit up, growing your business, scaling your business in a sustainable way.
Mhm.
That's it. And then, add in some of these tax things, but make sure you're saving for taxes, right? Like as long as people are putting aside the money, whether you're paying estimated taxes regularly or you're just saving up your money and settling up at the end of the year, as long as you're prepared, you can almost give yourself a refund, right? What entrepreneurs really don't like is that surprise when they're like, "Oh, I paid too much in taxes." Well, you're saying that because you didn't prepare
Right. Because
throughout the
now all of
year.
a sudden I have to write a check, and I don't know where that
Right.
money's going to come
Exactly.
from.
But if
Right.
you look at it like, okay, just like if I were a W-2 employee, if I kind of withhold from myself,
Yeah.
it becomes a lot easier because that's already money that you've earmarked for something else.
Sure. Yeah.
Yeah.
All right. Another thing you talk a lot about is, and I wanted to just get your thoughts on this, because this is often such a thing that I hear, and we observe it in everyday business. We'll say, God, that business they seemed like they were so busy. There was always people there. Let's say a restaurant, for example, because it's
Hmm.
something we can see, and yet they went out of business.
Yeah.
Why does that happen?
Oh man. I think so often we equate, you know, revenue with success. And we do that even when you look online. Like if you look on social media and
Hmm.
it pulls people in, it has pulled me in before where I've been like, "Oh man, this $10 million business." The question, if they're just saying, I run a $10 million business, I'm like, "Okay, but like how much
Right.
do you keep?"
Exactly. That's why I
'Cause-
love when people, for a small business, will try to value a business based on revenues. Revenues
right.
has very little to do with it. And also, confusing activity or busyness with
Yes, exactly.
necessarily
Exactly.
revenue.
All
Right.
revenue tells me is probably how busy you are.
Yeah, exactly. Exactly.
Because I know business owners that are, $1 million business owners. They make $1 million in revenue, right? I know one that makes $1 million in revenue and takes home 60%. They're, 60%, that's a nice profit margin there.
That's
I know
fantastic.
one that makes $1 million and takes home $60,000,
Yeah.
right? So you're working real hard for,
Mhm.
what you could get at, any other 40-hour week job probably, right? And you're hustling for it.
That's
And
right.
so that it really, and I know people that literally run businesses that bring in millions of dollars and lose money. And
Right.
that's very possible as well. So that money management is so important. So it's really important that we don't ever like it's kind of the grass is always greener. We see these businesses, we're like, oh, I wish I had a business like that. Not
Right.
necessarily.
Yeah, exactly, exactly.
Right? We don't know
It's
what's going on
also
behind the curtain.
exactly. It also speaks to what I talk about often on the show, that the business model could be broken, right?
Oh,
I mean,
absolutely.
it depends on the industry. Like I have a client who's in the wholesale food distribution industry, and there the margins are slim, so
Yeah,
he's got to continue to grow revenue so he can make a decent amount of
exactly.
profit. But by and large, for us as small business owners, part of it is that we keep chugging along with a broken business model
Hmm.
that's only going to give us those slim margins. And
Yes.
it's why we're spending every dollar and then don't have money for taxes, because we're trying to have it support our lifestyle, and it's just not going to produce it.
Exactly. That's exactly right. Yeah. And we can continue to grow that revenue, but if we don't fix the underlying issues in our finances, right? I'm not a marketing coach. I'll never say that I'm a marketing coach, but I can help you once the money comes in. Where does it go, right? How are we utilizing that in the best way possible? And in the beginning of business, sure, it is about kind of hustling, saying yes to a lot of things,
Right.
figuring out what your offer is, what works, what marketing strategy is going to work. And then you get to the point though where you really want to be making sure that, to your point, your margins are good. And that I think a lot of service-based businesses don't really, they're like, margins, I don't really have margins, but you do.
Right. Yeah,
Your time is worth money. Whether it's on your
exactly.
profit and loss statement or not, your time is worth money. And so, there's an opportunity cost to it, there's a real cost to it. So that's the concept of margin still exists. And for
Mhm.
you, it may be like, how do I become more efficient, right? Less about like reducing costs, but by becoming more efficient, you are reducing costs. You increase
Right.
your capacity, you increase your margins. So it's really important that we recognize if you're not healthy, people think like, okay, if I'm not making enough money, right? And this is past that early stage in money or in business, that I just need to get more clients or I just need to
Right.
get more business,
Yep.
right? But if you've got a bucket and there are holes in the bucket and you just increase the water pressure, it's still gonna drain out the bottom of the bucket.
That's right. And it just might make the situation even worse, right?
Right, exactly. And now you're
Likely.
even busier.
Yeah.
Yeah,
And that
exactly.
can be an example. There could be you're chasing the wrong clients, the wrong
Yeah.
type of offering.
Yep.
It could be all those combination of things. All right. I think this relates perfectly then to what you explained is the concept of these profit levers. Yes.
Yeah.
So would you introduce that and let's talk about that a little bit?
Yeah. So I'm a really big fan. I think sometimes finances feels mysterious to people and it just feels like, oh, I don't even know where to start. There's so many things I don't know. And I really like to show it's an equation, it's a math equation, and it's not even like a difficult
It's a
math
very
equation.
simple math question. I want to interrupt here because I think that's such an important point, Jamie. I'm
Yeah.
terrible at math. I always hated math. I've almost failed all of my math classes in high school and in junior college. But this is at most in business, the basics are just addition, subtraction, and division, right? This
That's it. Yeah.
and there's this thing called a spreadsheet. Oh, and there's this thing called QuickBooks that'll do the math for me. So it's not about the math.
Yeah, and it's just a basic equation. And I know that accounting can be annoying, right? Like I'll be the first to say as a CPA, I can admit this. We do some silly things. I call it accounting funny business,
Right.
and it makes it feel like it's a little murkier. So we'll say like, okay, sure, sure, it's money coming in minus money going out equals profit. But then we'll be like, well, but then
But
let's add depreciation in
right.
there, and let's just make it a little bit more complicated than that. But I think for most business owners, it is best to look at it as what's the money coming in and the money going out, right?
Mhm.
And at the end of the day, that's your profit. That's a very simple equation. And you can expand it a little bit to say, okay, let's add in, the number of sales of this product, times the price of that product minus the cost of that product, right?
Mhm.
Like you can kind of expand out the equation, but at the end of the day, it's really just an equation that my 11-year-old could, do in his head. And so that's not to say that, that's not to diminish the worry we have around finances, but the math is the math. And so when we kind of think of it and we take that emotion out, so often things like pricing, right? Coming up with a price for your product or service feels really emotional. We're like, oh, I'm tying this now to my own worth somehow. I know, especially like us women, we do that. We're like, oh, is it worth that? Right? Like it's about what is the product or service worth and what is the cost to actually produce it,
Mhm.
right?
So
And so
price is one of those levers then.
yes, so
Yes.
price
Okay.
is one of the levers that we talk about. So the levers are really anything in that equation, any variable in the equation that we have, we can pull a lever. And I think that when we take out that kind of all the emotional stuff that comes with it. And price is one of them. There's a lot of emotion around
Mhm.
spending as well, right? But if we're
Debt.
just like, hey, they're just levers. They're just
Yep.
levers, and I can pull a lever, and that means I can increase this thing. So pulling the price lever is essentially increasing your prices. Pulling the average transaction lever, price is one component of average transaction. But let's say, maybe it's an upsell that you have or an order bump, right? For a grocery store, to them, it's like, those aisles that you have at the end where you're grabbing gum or a magazine. That's just extra money that you probably weren't planning on doing, but hey, it's there. So, and it goes well with what I'm already getting. So let's go ahead and make that happen, right? So those little things can make a big difference. And so just pulling that lever, like, okay, we want to increase our average order bump by $5. If you do that across all your clients, all of a sudden you might be making a heck of a lot more,
Mhm.
than you think. So I think sometimes we get caught up in like, I need to double the amount of clients that I have. And really, you just need to tweak some levers. Like it can be, I often tell people to start at 2%, increase your price by 2%, maybe, right? Increase your average transaction value as well by those order bumps, maybe decrease your indirect costs, which are kind of those overhead costs that tend to balloon, right? Focus on a couple of those that you're not getting a return on and pull those different levers, not all at the same time, right? It's kind of about figuring out where do I start. One of the levers is also volume. Obviously, volume is a big part of that. But I'm a big proponent of pull the volume lever last, because if you do that, volume is like multiplying by the rest of the equation, right? So if we have optimized the rest of the equation and then we pull that volume lever, all of a sudden we are doing less work for more money, right? Like we are able to optimize each and every sale that we make. And so rather than pulling that volume lever and then being so busy that we don't have time to do any of the other stuff because we're just trying to keep our head above water, let's optimize, then let's go after that volume, right?
Yeah, this is worth reiterating. You've made this point
Yeah.
several times, but it's such a key takeaway, I think, here is that typically the way we look to solve the problem, I'm not making
Mhm.
enough money, is, well, I just need to sell more. I
Yep.
need to bring in more people. I need to reach more people. But to your point, if I'm piling that on top of a broken business model, I'm just going to have more headaches and have more of the same, which is not enough profit for more work.
Exactly. Exactly.
And so your concept is, which makes a lot of sense, let's make sure the foundation is right first,
Mhm.
that I am as profitable as possible first, then add the volume.
Exactly. Exactly. And you kind of do it, it's cyclical, right? So it's not like a one-time thing, but it's kind of looking, one of the things that I like to do when I'm working with people is, okay, let's look at and you can kind of look at their profit and loss and sort of get a vibe for where to start, right?
Mhm.
And talk to them about what are their biggest problems. So you can kind of see like, okay, where is the money maybe leaking out? Are our direct costs, like what are our margins looking like? Do they seem healthy? What are our, indirect costs looking like? What's our overhead? Are we, do we have a bunch of that we need to be looking at? Or maybe you don't have any of that and you're just exhausted because you're the solopreneur working and working and working. And in that case, maybe what you need to be doing is actually spending more to go get help, right? Hopefully,
Mhm.
again, once you've fixed pricing and
Right.
your profit margins are good, go get some help, and it's going to add to your indirect costs and direct costs in the short run, but in the long run, all of a sudden, you're going to have greater capacity and you're actually going to have 5 minutes for yourself, right? So it really is one of those things where you're kind of looking at like, what's my biggest pain point? Like, think, what is my biggest pain point right now? And like, go deeper. Don't just say like, I don't have enough money, because that's
Yeah.
everyone's we
Right.
all
Right.
want more money.
Or I don't have
But
enough
what's the biggest
customers, or
pain
whatever
point?
the case might be. Yeah,
Yeah.
I think to that point, one of the things that I see that I'm curious of your thoughts on is, and how
Mhm.
granular we get, Julie, is I'll see somebody's P&L, and all they've got is one account for revenue
Yes.
and maybe a cost of goods sold. But immediately what I ask is, well, how do you know what product line at
Hmm.
least is profitable, or what product maybe you should phase out, or service isn't making money? But if you don't get granular enough with the numbers, you can't answer those questions, can you?
Exactly. And that's my first thing. Like when I used to, so I did virtual CFO work kind of in the middle of my transition into this financial literacy space. And where I would always start is profit margins on a product or service basis, right?
Mhm.
Because you want to see what is actually making money. And an example of that is I worked actually with a brewery, and I went in and they didn't have a lot of great tracking. So I had to sit down and really, spreadsheet my little heart out, which is my happy place, to be honest. So I don't mind
Yes.
doing it, but collect all the information. And I had to separate it all out, and not just by the product or service, right? The different types of beer, but it was also like, okay, this beer is being sold in a can versus this one's being sold in a bottle versus this
Mhm.
is being sold in a keg. So there are different costs associated with it. And what I ended up finding is that their flagship beer was losing money when they
Interesting.
sold it in cans.
In
And
cans,
they
yeah.
had no idea.
Interesting.
And so that was something that like it got lost because you look at the whole P&L and they were a little profitable, but not as much as they wanted, because some
Right.
of their products were extremely profitable. But this one wasn't. And so then you have choices. It doesn't mean you have to get rid of it.
Right, exactly. I was going to ask you about that because I mean, it could be you decide that's a loss leader and it
Yeah.
helps us from a marketing perspective. Okay. Or likely what it means is we need to raise the price on this so that we can at least, if we're going to have it be a loss leader, which is a misnomer, it should at least
Yeah.
break even or make a little bit of profit,
Yes.
right?
Exactly. And loss leaders, I understand the strategy of loss leaders, but there
Yeah.
has to be a strategy.
There has to be a
right?
strategy.
It can't be accidental.
And it doesn't work in every industry, right? A grocery store can get away with that perhaps, but we got to be very careful with the small business that a loss leader doesn't equate to we're going to have a loss.
Exactly. If you are tracking it and you're saying, okay, we know that X percentage of people that buy this also go on to buy this. If you have your numbers down, it's a little bit more of an advanced strategy, right? Like Walmart can absolutely pull that off. Like they can price their chicken at 99 cents a pound.
That's right.
And
Or Costco
know
or whatever.
that,
Exactly.
yeah, people are going to make money. But it's going to be harder for a small business. Again, like that's an advanced strategy if you want to do it. But most of the time it happens where we have accidental loss
We just don't
leaders.
know. We just don't know.
And then every piece we're selling is costing us money. And that was just shocking. And so, but it leaves you options. I think people sometimes don't want to see that. But once you see it, you can say, okay, here are different options. And when I worked with them, it was, all right, we actually ended up doing a couple of things. We raised the price a little bit. We cut the costs because they were actually like the cans were costing a lot because they were doing a premium wrap. And so we looked at like, how can we actually reduce this a little bit? Right. And so we kind of structured out a little bit different. And we even looked at like, okay, ingredients going into this. How do we increase the yield of this? Right. So it's again, just an equation to say like, how do we make this equation work? And if you don't know what the equation is, how are you supposed to figure out how to make it work?
Right.
Right.
And so that's where we have to start and then figure out what levers in that equation make sense to tweak to get what we want, which is profitability. This is Henry Lopez with a quick message about our show sponsor and trusted service partner, The Franchise Guide. Giuseppe Grammatico is the Franchise Guide, and he provides expert consultation services to help you find the right franchise small business. If you are considering a franchise business, I recommend consulting The Franchise Guide. Giuseppe is a franchise veteran who simplifies the process of franchising and excels at guiding his clients to the franchise model that best suits them. He helps people like you find flexibility and freedom in their lives through franchise business ownership. And as your guide, he will help you answer any of your questions about franchises. Once he gets to know you and what you're looking for, he creates your own personalized model and shows you which franchise opportunities are a best match for your needs and preferences. The best part? It's all free. There's no catch. Like with real estate or business brokers, Giuseppe's fees are paid by the franchise company. So if you're interested in a franchise business, take the first step and schedule a free, no obligation call with Giuseppe. To learn more and to schedule your consultation with the Franchise Guide, please go to the show notes page for this episode at thehowofbusiness.com. There's also a link to the show notes page in the description of this episode. I want to ask you a tactical question about pricing, which is often a challenge. How do I do a price increase? And basically the question I want to ask you is, and this is mostly I'm thinking in the context of B2C, so consumers, a product or service. And let's say I got to raise my price by $10. I've determined that. Is it better to do one, rip the Band-Aid off price increase or two small increases?
So I actually take it this way. So it depends on the business model, obviously, right? And so what I typically do, especially if you're not sure, like a lot of times people are like, I need to increase the price, but I'm not sure how my market is going to respond to it.
I'm suspicious. I'm afraid I might get a backlash. Although a lot of that is to your point in my head, right? But let's say it's legitimately it's price sensitive, and I'm going to get pushback.
Yep. And so I would say what we do is we start it with actually new customers and just increase it all the way up. And say anybody new that's coming on, and you can quickly kind of gauge like, okay, is this price point working in my market? Because I think that's a good piece before you go back to existing clients and try to, do that.
Now, I can do that, Jamie, with a service, but not if I have a product, right?
Products are going to be harder. Products are going to be
harder.
So
with a service, I grandfather people perhaps and then test it to see what the reaction is with new clients, is what you're saying.
Yep. And then, and I think too, if you explain, like for me, especially in the B2C market, explaining like, hey, here's why, right? Like, here's why. We all understand inflation. We all understand prices have increased. Oftentimes, like, that's where it happens where, okay, we got to make a big increase because we just went 5 years without increasing our prices, but my costs increased 50%. So what do you think happens to your margins, right? And so it's why, like, eventually I do recommend people at least once a year, or if anything major changes, right? Sit down and analyze the cost increase. Right now, tariffs and things like that are one of those events that you want to sit down and say, like, okay, what do I need to change here to make this sustainable so that I don't end up accidentally selling things for less than the cost to actually be able to deliver them?
Yeah.
But I think when you're talking about, do you do it? It's kind of a know your audience, right? It really depends. I am a fan of just like, hey, if your margins aren't good, you just need to go for it. I've had people go through my program and I've said, okay, you can do this gradually or you can do it all at once. And most often they say, I just doubled all my prices overnight or whatever it was, right? That's an extreme example. Most people don't need to do that.
Right.
But they just were done with it. They were like, you know what? I'm tired of working and feeling exhausted and not making what I need. And I'd rather, right, know that, think about, you need to make less sales. All of a sudden, to make the same amount of money, right, profit-wise, you need to make less sales. And so you have to remember
that's a scary thing, though, right?
It is.
That's a scary thing.
It is, but then you think about it and you're like, well, it's less work for the same amount of money.
And that's what I need
Isn't
to do.
that the goal?
I have found a lot of businesses that I've seen die are on this downward spiral. Oh, I can't possibly pass on the expense. People just won't buy it. Well, it tells me one of two things. Either you have told yourself that, or you've ended up in a business where you're selling something that's ubiquitous, that is just a mass market product. There's no differentiation, and you're trying to compete against Walmart and Amazon for that, and you're going to die, right? So one way or the other, you have to identify if this is something that I simply cannot raise the price because people can buy it 10 other places cheaper. I've got a problem with my business model that I need to address, right?
Exactly.
Because I will not survive that as a small business owner.
And that's where you have that choice. You can compete on price, which I'd never recommend. I just think it's a losing game for a small business. We don't have the purchasing power.
We don't.
We do not have.
We don't have the volume.
We don't have the volume. We don't have the financing. We don't have anything that's going to allow us to be able to succeed in that, right? Maybe in very small local markets where there truly isn't competition, but it won't be long, right? That's going to change. So I definitely think you're right about differentiation is so critical, because it's funny. I was actually, I was talking to a group of women about this, and I was talking about like, well, if you are in a commodity type of business, right, then it might be harder. But I actually don't believe there are, with all the branding opportunities, there aren't as many commodity type of businesses.
That's fair.
Anyway, that's my argument, because, and I kind of like proved myself wrong as I was saying this in this group, because I started giving an example of like, I was drinking a bottle of water that it's probably 25 cents, right? That I probably paid for this on this giant. And I'm like I wouldn't pay more. And then I look around and I see this woman drinking one of those. It was a Liquid Death. This was like earlier on. And I'm like, she probably paid a couple dollars, and it's water. It's still water, but they've branded it in such a way that people will pay the additional money for water. And so if water isn't even a commodity, right? If we are able to like
good point,
10x what we can get for water, then it is a matter of like, how do you differentiate yourself from everyone else? How are you different? What are you doing that's attracting people in? And are you finding the right type of people? Like, right, don't, if you're going to try to compete on differentiation, you probably don't want to come to me, because I don't care what water I drink. I'm not your ideal client. Right. But it might exist out there. And so I do think like that differentiation is an important thing, and not impossible, but it takes a lot of work. Branding is not an easy task, especially for a small business.
Exactly. When you're counting on that.
Exactly.
All right. One other lever that you touched on that I want to talk about is debt, leveraging debt.
Yes.
And the reason I want to touch on this is, as you know better than I, this is another one of those mindset things that we bring from personal finance. Debt is bad, right?
Yep.
But talk to me. How do you guide your clients on understanding how to leverage the right type and amount of debt?
Well, and I think that's the word, is leverage, right? I think that's the interesting thing, is there's so much messaging in the world, in the personal finance world, around debt. And there's so much shame and so much, and I could go on for a million years about how I feel about that in general. But we have to remember that debt is different in business. Now, it can be the same, right? We can use it in the same way, which is
exactly. We could have bad credit card debt. I just worked with a client yesterday who's got a credit card that's 28% interest, and it's horrible. But yeah, so we can do the same. We can make the same mistakes in business.
Exactly. And there's good debt and there's bad debt. and in business. And that's because the good debt is the one that you're using to leverage, right? Like if you're going to expand and you already know, like, hey, I have this store, it's performing really well. I've done my market research. I want to open a second store. I don't want to like use all of my cash reserves, right? Then that is a great place. If you've done the work and know your numbers, debt can be a great thing to expand. Debt is amazing for expansion. Obviously, we always want to be measuring risk reward in that, right? And
Mhm.
not get too, sometimes as entrepreneurs, we get very rose-colored glasses. So
Right.
I'm a huge fan. I do a ton of forecasts. That's my favorite thing. And I always have a, base case, best case, worst case. Like worst
Mm.
case scenario, where are we sitting? And that doesn't mean like worst case scenario, like I never sell another thing, but like worst
Right.
case in the realm of possibility, economic downturn, where could we end up being? So you want to make those decisions eyes wide open. But I think it is really oversimplifying things to just say like never any debt, right? Like never ever do it. It's a personal thing. People are going to have various personal things, but make sure that
Right.
you are really remembering the lens of a business owner is different. And pretty much all big business, right? I mean, we had at Coca-Cola, we had billions of dollars. Like, right, we had so much debt. It was crazy, but we actually used it to grow a business, to make more money, right? Like that is the whole purpose of it. But what you don't want to do, right, is use debt to plug holes or as a
Ah,
band-aid.
exactly. Exactly. Or to continue, that's a great point. We need to use it as leverage, but where I see people make the mistake is using it to support a broken business model.
Exactly. Exactly. So I tell people like don't, with the profit levers, that's one that utilizing debt comes last, right? Because you have less need for it. If you're a profitable business, you'll have less need for it. And even if you do utilize it, you are putting yourself in a less risky situation because you have, built up a nest egg. You have some of that. You're just deciding to do it, not because you have to, because you can't pay your team unless are able to take out money on a line of credit, which actually line of credit is not as bad as some of the other options.
Correct. Yeah. No, I think
Credit
it's
cards,
depending on the type of business, we need to have a line of credit that we tap into
yes.
periodically, right?
Yep, exactly. And that can be a good way to do it where you're not kind of creating this debt snowball effect. But
Exactly.
yes, I am a big fan of having that available. And what I also say is if money is cheap, right? Cheap debt like is actually very expensive. Or easy debt is very expensive.
Well said. Exactly right.
Yes, the easier it is to go into debt, which is very easy these days. It's a click of a button. Oftentimes, I mean, I'll literally log into my bank account and I'm just trying to move money, right?
Yeah.
And it's like, do you want to move it
Do
a
you want
day faster for,
exactly.
a percent? And
Right.
it's defaulted to that. And so like even if I wasn't paying attention, I just say yes. And all of a sudden to get my money that I didn't even need today, it's fine tomorrow. I just paid a percent. And that's debt. And people don't realize like these are these
Mhm.
little micro ways that they're, essentially we're creating these debt relationships. Um, and it adds up. Like it feels like, oh, that's not, if you really need it every once in a while, fine. But
Right.
we don't need to, if we don't want to get in a situation where we need to do that.
Agreed.
And so if you are going to utilize debt to grow and to invest, it behooves you might have to then, okay, I got to show my tax returns or my P&L or go through that process that's a little more arduous
Right.
to qualify for better rates, right? And, a better term and then you are actually going to be better served by that versus the easy debt. Credit cards are the easiest debt of all time,
Correct.
but we
Yeah.
know that those can just, the rates are insane.
Easiest way to hang ourselves is to
Exactly.
pile up some credit card debt. All right. Let's talk about a book a little bit more. I'm curious. Again, it's called Hidden Profits. Why did you write the book and who is it for?
Yeah, so hidden profit is really for those business owners who have started their business and they're probably in the zone of trying to scale, trying to what I call getting over the hump, right?
Hmm.
So, usually it's between that, $50,000 in revenue to $500,000 in revenue. We have a couple different humps in business, but that's the first
Right.
big one. Maybe you're hiring for the first time, or maybe you're just trying to figure out how to make your business model really work. That's what I wanted to write for, because I do find there's a lot of great business books out there, but they often feel geared towards these much bigger thought leadership businesses. And I
Right.
love the mom and pop shops, right? Like I love the boutiques, the pet sitters, the Etsy sellers, that like I love that group of like self-made entrepreneurs
Yeah.
that don't have the access to a whole bunch of capital and venture capital funding and like all this kind of stuff, right? So they're just
Mhm.
trying to make it work. And they probably don't have an MBA. They probably
Yeah.
don't have a CPA,
They don't have an
right?
accounting department.
No, they don't have an accounting. It's them, right? They are all the roles. And they are, their own CFO, and they may not be able to afford to have a full team of financial people helping them yet, right?
Right.
So
Right.
what do? And so that's where it's equipping yourself with the information, the resources, and the tools to help you to get to that point and get over that hump. So that's what I love. And that's really what Hidden Profit was built for, is for those businesses to have actionable strategies, right? We've talked through some of the profit levers. There's a lot more in there.
Mhm.
And it goes into detail with examples and things like that of what we can actually do to make it real for people, to get your ideas going on how to make a more profitable business that will get you to wherever you want to go, whether that's a, $100 million business, or whether that's just like being able to take a vacation,
Yeah.
right? Like
Mhm.
real, true small business. So that was the impetus behind it. I've had it on my
Excellent.
heart for a while.
Yeah.
Um,
And so
yeah.
you've got some, I think, some bonus content at the website, right? Tell us
hmm
about that.
Yeah, so at jamietrull.com/hidden profit, for pre-ordering, we have some special bonuses. So the book doesn't come out officially until October 21st, but if you pre-order ahead of that, which is super helpful for a new author like myself, it helps, Amazon and, Target and Barnes and Noble know that, hey, this book is in demand. We're gonna
Right.
we're gonna stock more copies and things like that. So we have some pre-order bonuses. So if you all you have to do is order one copy wherever you want to order it. And we have all the links there on that page where you can order it. And you can go there, and then you can also just put in your information, and we will also send you our bonuses, which include a whole study guide that is going to go with it. So we have a digital study guide. So, I wanted to actually incorporate that into the book, but my editor said it's too much. So we've put it outside the book where people can actually, again, do those actionable things. So each chapter, there's going to be actions to take to make progress. So that's one of the things that we're giving. We also have a whole live, planning meeting that we're doing in November for anyone who pre-ordered the book. So that's, you can only get in, you can buy a ticket, but it's cheaper to just buy the
Oh,
book
okay.
than it is to buy a
That's going
ticket.
to be a virtual event.
Yes, we're doing a virtual event in November.
I
Yep.
like that idea.
So if you want to plan your year ahead, I love planning. The end of the year, beginning of the new year is my favorite time because
Mhm.
we get really excited about what's coming. So we're going to do a whole planning event together and work through some of the financial parts of that.
Excellent. Excellent. All right. I'll have a link to it, to the Hidden Profit link. I'll have that on the show notes page on this episode of thehowofbusiness.com. If you're somewhere where you can't write that down, take advantage of that opportunity. I love this idea of the virtual event with it as well.
Yeah.
All right, let's bring it together here and wrap it up. Jamie, what's one thing you want us to take away on this topic of profitability, of hidden profit?
I think the biggest thing is just that it's the finances part is often the part that we avoid because it's easier and it feels like a lot. And there's a million to-dos in our business, right? There are a million things demanding our attention. So it never feels like there's always fires to be fought,
Yeah,
right?
this never feels often for business as mission critical. I'll get
No,
to that
not
later.
until, March or April when it's time to file your taxes. That's when all of
Mhm.
a sudden we're like, oh, shoot, we got to look at our finances. But I really want to emphasize that if we're keeping up with our finances all year, right? If we're paying attention to what's going on, you got to have the data, right? We can't make decisions without data. We do all the time, actually. We make decisions without data. They're
We
not
do,
going to
yeah.
be the best
It's
decisions.
like navigating blind, is what I say.
Right. Yeah, exactly. Like you might get to your if you're trying to get to a destination, you don't know where you're going, you don't have directions. You might eventually
You
get
might still
there, but
stumble
like
there, yeah.
yeah, you spent a lot of extra time and effort doing it. And so I'm a big fan of, get your financials in order, even if it's just looking once a month at your financial statements, at your profit and loss. Even if you don't know what you're looking for, the more you look at it and compare it, right? Like compare this month to last month or this
Mhm.
year to last year, whatever it is, you will all of a sudden start just becoming more financially literate and understanding your business and seeing things that then help you make decisions in real time versus waiting till next year and saying, oh, I wasn't as profitable as I thought. I wonder what happened. You can actually tweak those things as you go along and utilize these profit levers to be able to do that, right? It's just an equation. It's not so hard, but we have to be able to look at it and look at the data, look at the numbers in order to make any changes that are actually going to be able to serve us.
Yeah, well said. I agree. That's been my experience as well. And with my clients, you've got to have that data to make these decisions. It cannot be, you will not be able to scale by just saying, let's see what's in the bank account at the end of the month, right?
Exactly.
That won't get you there. All right, tell us again where you want us to go online to learn more and to pre-order the Hidden Profits book.
Yeah, so Hidden Profit is just jamietrull.com/hidden profit. You can also find out more about what I do and what I offer at jamietrull.com, and then go subscribe on YouTube, because that's where I'm putting out just free information.
So what's the YouTube channel? Is it just Jamie Trull?
Yep, it's just my name, Jamie Trull.
Spell the last name.
Trull.
Perfect. Again, we'll have links to that on the show notes page, but in case you're on there, YouTube channel is full of information, free information, great learning resources. Excellent. This has been a great conversation, very actionable. Thanks, Jamie, for taking the time to be with me today and sharing all this knowledge, and I appreciate it.
Thanks so much for having me.
This is Henry Lopez, and thanks for joining us on this episode of The How of Business. My guest today again, Jamie Trull. I release new episodes every Monday morning. You can find the show anywhere you listen to podcasts, including my YouTube channel, the How of Business YouTube channel, and the website, thehowofbusiness.com. Thanks for listening.
Thank you for listening to The How of Business. For more information about our coaching programs, online courses, show notes pages, links, and other resources, please visit thehowofbusiness.com.